Alrighty, welcome to our wealth call on behalf of the Emerson Group for October 2023. My name is Nick Emerson, and I am the owner and operator of the Emerson Group, where we specialize in representing real estate investors with the 1031 exchange strategy. Today's call, we're going to be talking about all things insurance and kind of what's going on in the market, right? I'm sure a lot of people have heard all things about companies leaving California, leaving Florida, a lot of natural disasters. I'm sure policies are getting a renewal letter that looks much different number than what you had before. So with all these things going on, I thought it would be a great opportunity to have Jose with Kepler Insurance to talk more about what's going on in the insurance market, because he's a broker and he's dealing with a lot of this stuff right now. And I thought it'd be great if we could talk about the state of the insurance market here in California, what's going on with the fire protection insurance, which is becoming much more of a need to add on to our insurance policies. We're going to talk a little bit about where do we think the future of insurance is going to be going, and then really what is the impact of carriers leaving the state of California. I think, Jose, you said something like 7 of the top 12 insurance companies left the state of California. So some interesting conversation pieces here, but without further ado, Jose, thanks for your commitment of time today. And why don't you tell the audience a little bit about yourself and your business?
Well, thanks for inviting me, Nick. Pleasure to be here. I started in the insurance industry in 2005. I was a financial advisor for Prudential. Later on, I decided to just focus on just insurance. So I, just went into the broker market and set up my own corporation and started working with multiple carriers. The idea was that I didn't want to be tied to one company. I want to be able to pick and choose who I work with, what carriers can I actually work with, and bring multiple solutions to my clients so they can choose not just one.
Right.
A lot has changed in those days, like you just mentioned, especially in the homeowners insurance market. The last few years are being tough for the industry. Multiple big events in California, fires is the big focus, big losses, not only in properties, but also lives. And that is, we got to a point where a lot of carriers are decided to just move away, just close the book of business and just not even offer new policies, or
it no longer makes financial sense to be issuing policies in California.
Yes. There's been several reasons why we got to this point. Of course, the big events, the big natural disasters, we didn't have those before, at least not with the magnitude that we've been having lately in these last few years.
Yeah, you mentioned 14 of the 20 most destructive fires in the state of California have occurred since 2015. So yes. In the last 8 years, we've seen 14 of the largest fires in state history from a cost standpoint and a destruction standpoint.
Yeah.
And we're starting to feel that.
Yes, correct. And insurance are here to, of course, make money. It's all based on numbers, right? So if the money that is coming in is less than the money coming out, they got to do something. And unfortunately, the process where they need to go to increase their rates is something that needs to be approved by the Department of Insurance in California. And normally it can take up to 6 months, but there's always a pushback and go back and forward that it takes more than a year to get that rate approved. So by the time they get the rate approved,
they're already ready to make a new.
They're already, increase the premiums maybe, twice.
So we're not even seeing real time what insurance companies are doing, because they're increasing the policies, but they don't have any choice but to try to request a new increase every year.
Yeah,
right.
And there is a cap on how much they can increase, right? So it's not like they can just file for 100% increase. That will be a no-no.
And part of that cap then might be a culprit of why companies are leaving California.
That is exactly
right. Like if we can't increase 100%, it doesn't make economical business. We're out of here.
Correct.
Okay.
Correct. So the shift started maybe 2-3 years ago with some carriers starting to pick and choose where they want the business. Then they started selling their book of business to other companies, and now we got to the point that there's few places where you can get a homeowners insurance policy with a carrier that will cover fire. The new tendency is that the carrier will offer you a homeowners insurance, but exclude the fire peril. So basically, they insure your home for liability, theft, water damage. But if the house burns, they're not paying. So what is forcing the homeowner is to pair that policy with a policy from the California FAIR plan that will protect the home from fire.
And also, just for everyone listening, we will have a resource page for you to access that'll have links to CAL FIRE, or not CAL FIRE, but the
California FAIR plan.
California plan, and then other links to this conversation, so so along those lines, obviously, what is a typical fire insurance policy? I'm sure it's all over the place depending on where it is, but if I'm sitting here right now and I'm a homeowner and I'm recognizing that I don't have fire insurance, and I was curious about what that would look like to get that coverage.
Well, you will find out because your current carrier will come back and say, hey, either I'm renewing your policy, but I'm not protecting you against fire, or if you're buying a property, the quotes that you're going to be getting are going to be quotes that they exclude fire. Those are what we call DIC policies, difference in conditions, where the carrier is picking and choosing what they're going to be insuring and what they don't want to insure.
Okay.
So if you are facing that situation, we need to go into the California FAIR plan and request a quote for that property. And then once the quote needs to mirror the other policy, the homeowners without fire, the coverage needs to be the same, exactly the same. Once we have that pair, we can issue the policies. So that homeowner will have 2 policies for that house. And then the cost is also going up.
Right.
So if you're looking
for both your regular policy and for the fire.
Right.
So you're double dipping.
Well, the regular policy won't have an increase, or at least it won't be that much expensive, because the big issue is fire, and you're excluding that. So the risk in that policy is only water, theft, but not the high risk of fire. But the California FAIR plan will be probably double the amount on premium. So if you're looking at $1,500 for the homeowner, the other one will be about $3,000. So I'm seeing policies, or a combination of policies, where the premium is reaching $4,000, $6,000 a year.
And this is something where the house would have previously been, let's say, $2,000.
Correct.
And now we're re-pulling it for a renewal, or they're looking for a new carrier.
Right.
And they're saying, now it's $5,000 or $6,000.
Yeah. So I work a lot with buyers, and in some situations the premium is that much that they're like, $6,000 a year. That's $500 more a month, just to pay for the insurance on the home, and they are rethinking the purchase. And
so I want to pause right there, because we're just starting to see the slow trickle effect of how natural disasters, the amount of money that's being spent, how that's going to start showing up in our day-to-day lives. And the reality is, costs are increasing. That's not going to stop, right?
No,
it's not going to stop. So we're going to have to start making decisions with this information in mind, right? I feel like insurance was just cool, I'm buying the house, let's get the insurance at the end, close the deal.
Right.
Now kind of what we're talking about here is, well, let's look at what the insurance options are before we even offer on the house.
Yeah, you are completely right. I've been in this industry for several years, and usually you worry about the insurance maybe a few days before you close an escrow, right? It was the last piece that you need to add to complete the file, and then you go through. Now the situation has completely shifted, where you want to look at the insurance upfront, so you know if you're going to have a big issue to get insurance, you know that you're going to be able to afford the premium, and then everything now is taking longer too.
You mentioned that it was before, it was a couple of days, and now
well, the insurance companies now, there are fewer carriers that are handling the volume of transaction that we're having today. So it's like a funnel. So before, I can issue a policy by just quoting online, getting the quote in the computer, sending it to the client, and then actually I was binding it the same day.
right.
Now the carriers are asking for photos of the property. They want to see before they quote what they're getting into it. It takes the turnaround time, in between 1 to 3 weeks.
Some of the questions you'd mentioned is they want to know what's the age of the roof.
Yes.
Right. What are some of the main components?
Yeah, usually they want to know, San Diego, South San Diego is older than North San Diego. Northern San Diego, the properties are being built more recently. Yeah. But if you're looking at a property in Southern San Diego, the property might be just built like 1928 to 1940. So that property, a roof, usually if it's a tar roof, 20 years, and then they're starting to look closely to that property to see if the roof is handling well, what maintenance that they have. If
they're being more detailed about the cost structures, knowing, okay, not all houses are equal.
Exactly.
And if I know the roof is coming up, I'm gonna hedge and increase the amount of the policy.
Correct. So they're really, the due diligence now is tougher than it was before.
They've had to change their standards, right? Because insurance companies have been operating in an environment where natural disasters were not an ongoing thing that we have to budget for every year now.
Yes.
So that was all right. Cool. Write the policies, get the checks.
Yeah.
Actuaries are good on their numbers.
Money coming in.
And we've got some really good bank accounts. And now they've got hit hard.
Yeah.
And they've got to really think about their process, the way they do things, be smarter about it. So there's a lot going on.
There is a lot going on.
And I'm glad we're talking about this, because this is really something we need to start getting behind mentally. We talked about the cost structure changing and going up from an investment standpoint, right? As an investor, if I'm underwriting deals to buy them and I'm making my normal assumption, right, for insurance, let's say $100 a month or $150.
Yeah, those
yeah. So if I'm looking at a property that's positive $300 a month, and then I get an insurance policy that's $4,000 higher than I thought it would be, an asset that looks like it's in the green is actually going to be operating in the red.
Yeah. Yeah, if your margins are tight, definitely you can switch to, from blue to red pretty easy.
I can tell you personally, for several of my investment properties, that over the past year, these are fully renovated properties, the bill went up 25% from 1 year to the next. Nothing's changed.
Yeah.
Right? Just that's the effect that we're feeling across not just California, but across the US as a whole.
Correct. This is not an isolated state with all these problems. We have Florida.
We're all going to share in the natural disaster.
Yeah, there's more, Florida has more hurricanes, then the plains has more tornadoes. So insurance companies are getting crunched before they can afford to pay claims on either side of the United States, but the rest of the country was bringing positive cash flow.
Right.
Now we're getting into a point where there's no way to hide. There's natural disasters are more common, more unpredictable.
And they're happening in more states.
More states, and in a larger scale, right? So, but there's always a light at the end of the tunnel. Definitely.
Is there, Jose?
Well, let's put it this way. Rates are not coming down. That's for sure. But the rates will go according to how the risk that the property is facing. That's where they're pushing. That's where, the insurance commissioner with the California, with the insurance association, the realtors, everybody's getting together and say, hey, we need to find a solution to this. What are we going to do? One of the problems is that the rates are being based on, all information, that doesn't really take into account what is happening now. So they're going to allow them to take new data, current data, to apply into the rates. The California Insurance Department is also going to, since they're going to allow you to do that, they're going to ask them to, have some skin on the game and say, hey, you need to insure properties that are in the fire zone. X percentage of your business needs to be coming from those areas. You just can't cherry pick and take the good apples and leave the bad apples.
Right.
You need to take also.
If you're issuing policies in this area, you can't discriminate.
Exactly. And I want you to issue, more policies in the burn areas than what you're issuing in the healthy areas, right? I've seen also a more proactive approach too from the California Fair Plan. This year, they came up with a system or a program where they're giving up to 10% discount and plus 5%, depending on what your proactive measures are in the property. So cleaning up all your surroundings of the house, you're facing a canyon, just cutting all those plants that are around the house, trimming your trees in the property, make sure that your roof is in good standard, make sure that you don't have, a lot of debris around the house.
So there's some things you can do to try to help offset some of the cost.
Yes.
But if I'm thinking and putting my investor hat on, we're paying to fix our property up to get a lower rate. So really we're spending more money as a whole in either bucket.
Yeah.
But I think one important point on that though is that the way we think about how we hold properties with insurance and kind of more of the proactive versus passive approach.
Right. That's really important because there's two different kinds of investors, right? There are the investors that are conscious that their property needs maintenance, and there are the investors that are stretching the dollar all the way they can without putting a penny more into the property. You just worry or they just want the inflow of money and put in the lease in the property. Well, those days are over, because if you're doing that, it's going to catch up on you. Eventually, the insurance.
You're going to pay for it one way or another.
Yes,
so you might as well improve your property and get hopefully some discount in that regard. But also one of the things we talked about is not only kind of the way that we might obtain a policy, but also the way that we are building properties, the construction. Like this is such a bigger, right? When we started talking about it, realizing this is such a bigger macro conversation of all the little things that are going to have to adjust or make changes through the course of these increasing costs, natural disasters. Is how are we building properties? What materials are we using? What can we use to be more intentional about not being combustible, being fireproof, right? Or just helping to mitigate those things. And hopefully maybe we might see insurance companies create more incentives for people to use different types of building materials.
Yes.
So it's kind of like we're all sharing in this together, right? Like insurance companies are eating it, homeowners are going to have to eat it, but we're all kind of in this together to say, what can we do? And we're just in that environment now, figuring out what can we do to help.
We're all part of the same problem, right? None of us are causing the fires. The fires are, just caused by extreme natural events. But we need to make sure that if that happens close to us, that at least we're going to be able to save the most amount of properties by having a clearance between the properties and all the brushes, by having the construction being, the home being built with materials that are not, prompt to light right away.
Landscaping, right? Trees, vegetation. I mean, all the fencing. There's a lot of things.
Fencing is one of the things that they were talking about too. Is like we're so used to the wood fence, but that's
just a bag of ammo for fire.
Yeah.
Right.
So, so there's a lot of things that I think that we can improve in order to, better this scenario. I also think that they're probably going to force us to build closer together, to have smaller homes in a more tight area. The idea of having homes spread out in a large
with plenty of fuel in between them, so they
exactly.
can
Well,
keep
not only
alive.
that, you have a fire department is going to be further away, so the reaction time is going to be less.
So the spread, right? The spread is something where the way we spread with growth and population, we're going to have to just be more mindful about thinking of other parameters, conditions.
I think so. That
we're just going to think through things, right, in a much more intentional manner surrounding that.
Right. It's not going to be just let's build it here just because. Well, we're going to be looking at a little bit more than that.
So, I mean, I know a lot of this we've talked about through this conversation of just carriers leaving the state of California, and that's creating some bottleneck, right? Issues with you're trying to help clients renew policies, get new policies, getting policies for buying homes.
Yep.
And because of the carriers that have left, there's a lot of delay, or there's a lot of what is the environment?
It is tough. There's no way of sugarcoating. I used to generate maybe 5-6 policies in a week. It was a pretty simple process where I can go into a couple of different systems, key all the information, and get quotes right away. Soft quotes, the ones they run the loss report to see if there was previous damage on the house and all that, the quote would be firm in less than 24 hours.
It was like a checklist that they had, like an algorithm. Now it's
I was moving
someone sitting behind the computer who's making.
Yeah, so everything was more automatic, right? It was just through the system.
Yeah.
And that was pretty easy, pretty straightforward. It started changing little by little to the point that now, from maybe I had 15 different carriers to choose, I'm down to 2 or 3. Depending on the type of property. I would say that, before maybe 15% was requiring a California Fair Plan policy. Now we are more like the 60% are requiring a California Fair Plan policy. So, it's a different environment.
Yeah.
It's frustrating.
It's a different environment, and it's going to be an evolving environment, I'm sure, for many years to come as we try to get a footing on what should the new standard look like of this entire process.
Yeah. Just to give you an idea, they try to put a plan together by the end of September to see how they can address this. Unfortunately, they couldn't get into something, concrete. So everything is being delayed to next year. So in the short term, this is what we're going to have to deal with. There's going to be no change until maybe the middle end of next year.
And when you say no change, what do you mean? Meaning it's going to be much fewer carriers, a much longer process to get a policy, and hopefully, as this kind of works through next year, we're going to be into more of a efficient.
Well, I'm hoping that they can actually bring some carriers back to California, just so we can spread the risk, and then it will be easier to work.
Some of these companies might have left until they have a game plan to come back. Is that fair? Like, okay, let's leave, and then we can reassess how we would need to write the policy.
Well, leaving the state was also a way to muscle, the regulations and trying to see, well, if you change the regulations, I might be coming back. But if the way they are right now is not working in my favor, I'm out.
So we're really in a realignment period. In some sense, right?
I hope that we're going to bring some of these companies back. I'm not forecasting that it's going to get easier or cheaper. There's definitely the
costs are going to increase.
The due diligence is going to be there. They're just not going to take any property. They want to make sure that where they're issuing a policy, it's a property that won't have any claim right away, that the roof is there, the plumbing is good, electrical is up to date, and there's no debris around the house. So with that, at least they're minimizing their risk. So I don't think that we're going to go back to the old times. I don't think that's going to happen. I think that they're going to be more proactive, and hopefully we're going to have more options by the first, second quarter of next year.
Okay. So if you're listening to this call, right, some of the things, takeaways are have a longer runway when you're looking for insurance options.
I definitely encourage you to be proactive. Even if you're thinking of buying a property, work with an agent to just make sure that you're going to be able to insure the property right away.
Reach out to you, get an idea of what the
reach out,
cost is.
to an agent. Make sure that you can run in a scenario. You can have an estimate of how much is that going to cost. Also, the process of issuing the policy is taking longer. There's more things that we need to work on. The California FAIR plan, in order to release the application, is going to ask you for pictures or photos of the house that are not older than 7 days. And I need to get those photos. I need to put them and load it.
So we need to add another thing when we're doing a home inspection in our escrow period.
Yeah,
make sure we're doing
and it takes a few days for it to come back. By the time I have that back, then escrow give me all the lender information, the loan number and all that, and the day they're closing. Well, I need to make sure that the proposal is in the time frame only lasts 30 days. So if I work too in advance, it doesn't work. If I work too close to closing date, I might not have anything to share with you by the time that you want to close. So timing is pretty critical.
Okay.
The other thing too is with the California FAIR plan, in order to get that policy bound, you need a 40% down payment. So we're used to having escrow pay for everything insurance. Well, the buyer is going to pay for that 40% upfront, and then the rest of the premium will be by the escrow.
Interesting. So instead of having that fee on the closing statement getting paid, you're now actually spending money during escrow.
Yes. Yeah, you can get it back from escrow, but you will have that at 40% premium upfront in order to get that proof of insurance for the fire.
Okay.
So yeah, as you can see, there's a lot of things that you need to, navigate. So this is not something that is going to happen from one day to the other.
Right. There's a lot of considerations. There's more time needed. There's potentially different policies that you might need to accomplish a complete policy for your home. And then obviously looking into the kind of multifamily commercial assets and stuff. I think if you're an investor, right, you're really looking to bundle as much as you can. However, bundling is also becoming a little bit more tricky.
Yes, so we used to have programs where you can bundle your home and auto. Unfortunately, those programs are almost gone because most of the carriers that are issuing a homeowners policy now are not offering auto. And most of the companies that were offering those bundles were the big carriers like, State Farm, Farmers, Allstate, and they're all gone. So there's little options now. I think the way to save money is going to be by trying to mitigate the risk, by trying to go access to those discount programs through the California FAIR plan. But yeah, the home and auto bundle are going to be less affordable, less available for us.
Yeah, don't assume that's gonna, because you have all those needs, that you're gonna be able to fit them all into one policy.
Now, for your investors that are buying multi, condos or apartment buildings, those are written on a commercial paper. We have a little bit of resistance for some of the carriers, but we're still issuing policies on those. But they're also going through that same process of trying to pick and choose what they want to insure. So they want to make sure that the property is.
So is the commercial policies and the residential, is it like residential and commercial real estate on the broker side where they're kind of operating in their own spaces?
Right. Yeah. The carriers that operate on the commercial are not the ones that are operating in the homeowners insurance. But we're all sharing the same scenarios right now where we still have a lot more options on the commercial side, but they're getting, a little more picky on what they are picking, what they're actually issuing in policies, where the state of the building.
what's a scenario in which someone can get a commercial policy for something that might be residential? Is that possible? Like if they had a duplex or a triplex or a fourplex, could that be considered commercial on a
You're right. Whenever
insurance note?
whenever the doors, if you have more than 3 doors, that is already in a commercial paper.
Okay.
If you have a couple of units, that can still is you want to issue policies on each unit.
Right.
But when you have more units, a fourplex, that's a commercial paper. That's a completely different underwriting. That's a completely different carrier, the one that is going to offer you insurance for that.
Well, one of the things we talked about is that there is a couple companies, and obviously there's a lot going on in flux, but some companies where you might be able to help some clients potentially bundle a portfolio of properties.
Yeah,
and there could be some savings there, right? So
I need to explore a little bit more in that sense, because everything is changing so much in such a short time. There used to be programs where you can have an investor with 20 properties. It can be homes, it can be multifamilies, and you will be able to bundle that portfolio into one master policy.
right.
That way you take the headache of having 20 policies, 20 premiums.
Well, that's what I'm trying to do here, Jose.
23.
It's for our listeners here. How can we save time? How can we save money? How can we be proactive? How can we react to what the current insurance market is and what we can do about it? So I trust that the purpose of this conversation is for people to really understand kind of what's going on right now. What is it feeling like as an insurance broker as far as the players go, the processes, and ultimately understanding just kind of where does our head need to be at, and our focus surrounding our insurance policies of what it's going to look like moving forward, because they're undoubtedly going up. The parameters that you have to provide them with as far as your property condition and stuff are changing.
Yeah.
So there's a lot of things going on here, and really wanted you to understand where the market's at in that space. And if you have questions about your particular policy or policies, or maybe you don't have a coverage and you want to add it, or any of those things, those are all things that Jose can help out with to get you the information you need. And outside of that, Jose, was there anything else that we didn't talk about that we should have talked about, or anything else that you want to say in parting?
No, like I said, is you just basically summarize it, right? It's different times. Now we definitely need to be more proactive with,
We can't assume anything.
yes,
So we have to have everything checked, especially if we're buying property. We need to
better
know.
check it in advance, not just jump into the process without not knowing, or waiting too long to get your numbers.
Right. And one thing I want to say too is that now on the agent side and representing clients to sell our property, we actually have to have the property have a fire inspection done.
Mhm.
It's not for every property, but if you're located in the fire map that's been redrawn in San Diego, which we'll provide a link for that too, they make you do an inspection and pay for that as part of your escrow process to close the deal.
Mhm.
So it's another layer that we're adding into it, where if you do live on a canyon or an area has a lot of brush or other things that you can help mitigate, that's going to be important, because they're going to make you do it anyways for the purpose of the sale. So, well, that being said, I trust you guys got some insight as to what's going on in the insurance market and what we have ahead for us, and know that as the market changes, new opportunities might become available for the way in which we put policies together or bundle things. We'll be sure to stay informed on that and bring Jose back with more updates when it's appropriate. So,
Yeah, hopefully I can bring better news.
yeah.
But for now, like we just share, there's different times. Just be proactive. Make sure that you get all the check marks, and there's still a lot of good properties available down there. The cost of insurance it went up, but I think that things will change sooner or later, and we're going to be able to access more carriers. We can't stay in this environment forever. So
We're storming right now so
Yeah.
that we can form into a better
yes,
standards and processes to be more efficient on the back end.
yeah, I think so.
Cool. Well, Jose, thank you again for your commitment of time. Emerson Group, I hope that you guys have gotten plenty of value and good insights out of this. And I wish you guys a wealthy rest of your week. Happy Halloween to everyone. And we will see you next month for our November wealth call. Take care.
Bye.